All right, beautiful. Good afternoon, everybody. Today, of course, is April 27th and our regularly scheduled webinar. So today what I want to do is go through the PowerPoint presentation, which you should be able to access a copy through the handout section on the right or on your display for GoToWebinar. And then we'll take a look at some earnings. All right, again, as always, I want to start with the monthly charts just for a couple of these instruments we're tracking. First is the S&P. Now, as you can see from this chart, the upper band now is 2335. And we are now really about 60, about 50 points above that. So we're back above the upper band. All right, now again, to me, this level now should offer support. All right, and quite frankly, if we close back underneath it, then I think that probably will begin a fairly steep correction. For the Dow, it's 20,256. You can see we're about 700 points above that. And for the NASDAQ Composite, it's 5713. We're trading at 60.25, so we're about 300 points above the upper band on the NASDAQ Composite. So, again, I don't know what we want to call this. To me, it's just unusual strength here in the markets, just incredible strength. All right, and then here's oil. Okay, again, what I've been pointing out here on oil for the last few webinars is the fact that it's basically trading right at the mid-band. 54.91 is the mid-band, okay? Now, we still have some positive momentum here in oil. You can see the money flows turn positive. But the way I see it right now is, again, if we get repelled here and we start to break down, I think we go down to about this level in here. And I think the next bottom would be the one that might be fairly fruitful to look at in terms of buying. All right. Scoping down to the 60-minute charts. Here's the S&P. Right now, the active objective is to 2406. 2382.82 is the confirming line up, and we've had two closes above that. So I fully expect that level to get hit. And then when we look here at the shorter term chart, the 30-minute chart, we can see that we got above the upper band here. And we've had the 30 cross into an uptrend. And by the way, the 60, I don't know if you can see it over here, but the 60 is getting very close to crossing into an uptrend. Now the 30-minute chart has already crossed over. So I think that once the 60 does cross, it's certainly going to confirm a move up to 2406, and we're really not that far away from it. Here's the VIX. And I guess right now that's the major impediment because we are back down to all-time lows. It hit the 1094 level. 1133 is the upside level to 1250. Now you can see the 60 is starting to roll over into a downtrend. The 30 has already crossed out. So I fully expect that 1250 should offer some strong resistance. We've got the down gap here. We've got some really, I would say, strong areas of resistance if the VIX does continue to rally. For the Qs, all right, the next upside level is 137.5. 135.16 is the confirming line, all right? Yesterday closed just under that. All right, so it closed, about 21 cents under that 135.16 level. But as you can see here, short term, it's a little overbought. It's a little overbought vis-a-vis the fact that it did get above the upper band, okay? Same with the 30. Like the S&P, though, the 30 is in an uptrend, all right? And by the way, on the 60, I want to point this out on the Qs, it did already cross into an uptrend. So we've got some interesting things because tonight we have a couple of the major NASDAQ stocks reporting. So it'll be interesting to see if they provide that boost to the Qs. Now here's the diamonds, okay. 209.38 was the level I was just taking out. 209.77 is the confirming line up to the 210, roughly 211 area, okay. And yesterday it closed underneath it by 30 cents. So it's got to close above that line two days in a row, and then it'll confirm a move up. And by the way, I think if it does pull back, you know, it probably might go down to like 109, maybe 108.80 area. I don't see it going back much more. Here's a 30-minute chart of the diamonds. And you can see, by the way, what's been kind of interesting about these charts, especially this week, is we've had the 2 days of the massive gaps. Let me take a look at the S&P. I want to go back to the S&P. Okay, same thing on the S&P. Again, we've had the two massive gaps, okay, 2 days in a row. And I think what was kind of interesting about this whole structure was the fact that the intraday ranges were really narrow. Most of the move, you know, if you, to be positioned to capture the move, you would have really had to be long come last Friday. All right, and you know, again, even Monday, I think the intraday range was like 7-8 points. The total range for the day was like 15, maybe 20. You know, so you really didn't have an advantage, or you didn't have an opportunity to really make money off that if you were trying to day trade this. Same thing with on Tuesday. Okay, we had the same scenario where the bulk of the move was made on the gap. You know, now obviously these gaps, you know, if somebody were short, they were getting killed here off these gap moves. Yeah, this is probably one of the reasons, Andrew, good point, to be looking out a week. Because, you know, a lot of times, like even like if we look here, this is what's really kind of bad about this. The 21st was the Friday. You know, the 21st was just basically a consolidation day. It didn't do anything, okay? And then, lo and behold, we have the extreme gap. So, yeah, if you're positioned for the next week's using next week's weekly options, you know, you would have been capturing the bulk of this move, or at least grabbing it. And what's kind of interesting about the 30 here, if you look at this after the gap, let me grab a pen. No. It never closed underneath the upper band. So, I mean, you could have just stayed long this position. And lo and behold, it gapped up again. And, of course, here's the first bar that probably closed back inside the upper band. Yeah, it probably was. And then again, now going back to the diamonds, okay, here's the 30-minute chart. Same scenario you see on the other markets. I mean, we've had the two extreme up gaps, and now it's back inside the upper band. You know, but I think one of the themes I keep trying to convey is, because I see people doing this, you know, they're going in, they're trying to short this market. And I keep saying, don't short. You know, at this point, there's no reason to short. I think if the S&P closes back inside the upper band on the monthly chart, I think that's a compelling reason to short the market. But right now, you know, how do I say it? I guess, let's go back here to the 60. Okay, I'm sorry, to the 30. Now, you don't really see it here. Okay, all right. All right. Is there a compelling reason to short this market? Well, I'm going to point out this. Like over here, we crossed into a downtrend. And then up here, we kind of stalled at the 2375 line. So we have a downtrend, short-term momentum's down, price was up against the 2375 resistance level, and then it sold off underneath it. I mean, that could be a compelling reason to short, but if I was shorting this market, okay, I'd be pulling that profit off pretty quickly. Certainly when it hit the bottom band, no question about it. Because we know that the higher time frames are in uptrends. So in essence, this is a counter trend trade. Sorry about that. I don't know if you can hear it. My dog's going nuts here in the background. All right, back to the diamonds. So anyway, the diamonds are back inside the upper band. No, somebody's walking some dogs. And there's one particular dog, which we call like the wiener dog, that for some reason my dog goes crazy over. My dog thinks she owns the whole block, so. The mailman she doesn't even move for anymore. Anyway, here's the GDX 60-minute chart. Here are the levels. I mean, it failed at 25. And by the way, that was a level I expected failure at. And it got to, well, within 12 cents of it, and then it's been pulling back since. Now, yesterday, it hit the 21.88 level. 22.27 is the confirming line up to 23.77. And you can see yesterday, it took it out slightly. And actually, it closed a penny underneath it up here, if you can see this chart. See up here. So it didn't close above it yesterday. And I think today we're starting to pull back again. We'll look at that after I close down the PowerPoint. Short-term chart GDX has moved into a downtrend. Okay. So short-term, the shorter-term momentum has already shifted down. You can see here the 200 starting to curl down. And then the XLE, right? I don't know if I've been vividly clear about this, writing about this in the updates, but I do expect the XLE to drop to around the 62 area. That would be my long-term objective here for the XLE. And quite frankly, yesterday it came back up and basically stalled just under that 69.53 line. And today, of course, it's back down. So I think we break under 65.63. I think we have another 3 to maybe 5 points down. 30-minute chart, you can see that's already turned bearish. And then here's Apple, okay? 143.75 is the major level. The next confirming line up is 145.31. Now, you can see from this chart that the 60 is kind of very close to moving into an uptrend. All right, so I think if this does cross to the upside, I think I fully expect Apple to hit 150, assuming that event occurs. Now let's just talk about a few earnings deals for a minute, and then we'll look at some other live charts after this. But this was GNC, okay? GNC gapped up. All right, and again, I've highlighted the critical levels right now. The 835 is the low of the up gap bar. 733 is the high of the gap bar. The midpoint 784. Okay, pull back to 778. So it came back to roughly right around the midpoint. And since that point, it's up about a half a buck. Now, when it got oversold here on the 25th, that was only day 6. And what I notice is usually day 8, these things start to move. All right, so yesterday would be day 7, today would be day 8. And we'll take a look at that when I close down. Here's U.S. Steel. Now, here's what I'm starting to look at. All right. Here's U.S. Steel on a daily chart. You can see the Chaikin money flow has flipped negative on the daily chart. Now we scope down to a 60-minute chart. It had been primarily negative. It's been primarily negative since the 12th. Flipped negative, slight positive yesterday. Late in the day, it flipped to negative. So we essentially had multiple time frames here. And of course, you can see from this chart that the 60s in a well-defined downtrend. U.S. Steel reports, and they collapse. All right. Now, just to give you an idea, the 131 put went from $1.06 to roughly $8 overnight as a result of this bearish earnings report. The critical thing that I've highlighted right now on the 60 chart is the high and low of the first bar. We did have a close underneath the low, so we would expect follow through. I believe today it did follow through to the downside. Here's another stock that reported negative. This was Grainger. Negative Chaikin money flow on the daily. Just negative, of course, a well-defined downtrend on the 60. Negative money flow. This company reports, look at this, close underneath the low, continues to drift down. So 1, 2, 3, 4, 5, 6, 7. Yesterday was day 7. So today it would actually be day 8. So we'll see if this is starting to firm up. But if you look at this, I mean, this thing was roughly, what, 225, dropped about $25 off their earnings from that setup. Here's another stock, CUDA, Barracuda Networks. Again, negative money flow here on the daily chart before earnings. And you can see the 60 had flipped to negative. So here's a stock, that a lower price stock, about 23.5 bucks, dropped to a low of $19. Okay, in basically one day. So that's what, about a $4.50 move. I didn't price out options on this. I would have been curious to see what this would have done to an active money put. Okay, but that's what I wanted to cover today. By the way, any questions on any of this? And then I'm going to move on. We'll look at some live charts and see if they're relevant. Yeah, Andrew, that's a good comment. He says the market makers underestimated that move on X. I don't know if it was so much they underestimated as the fact that, as we know, these anomalies occur. Because basically, based on a $1 put, that was 3%. I'm assuming the call was about that. So they were expecting about a 6% move. It just happened that this thing had an extraordinary move. And, again, we know that these things happen. Now, here's what I want to show. Today, there were a couple of deals setting up like that. I'm sorry, it's a monthly chart. Let's take a look at GNC first. Okay. Okay, so today is day 8. Okay, today is day 8. Not quite oversold, but you notice it's holding above that high. Money flow is starting to flip positive. So to me, this thing should make another run towards the upper band. Okay, the other one was GWW. Because again, this is day 8. Now, this really is still continuing to flatline. Not doing much here at all. What was the other one? CUDA. All right, now CUDA, this is kind of interesting because CUDA still has not closed above the high of the gap bar. That high is 21.31. So I'd still be inclined to be bearish until there's a close above the high of the gap. Twitter. Let's take a look at Twitter. Okay, negative money flow daily. Negative on the 60 as well. I mean, so to me, Twitter should have probably, based on using money flow as the lead indicator for pre-earnings, it probably should have dropped, and obviously it didn't. And I'm going to show you one more that didn't comply, which Grubhub. Because I saw Grub was up fairly substantially today. Okay, here we've got negative money flow on the 60 too. And look at this, up almost 20%, $6.50 today. All right. But then I look at a stock like this, down almost 12% now, slightly negative on the 60, negative on the daily. The other one was O'Reilly. Now that's down about 14 bucks, negative money flow, and negative money flow as well, with a 60-minute downtrend. All right, so now it's down 14 bucks. Now, I want to go back to Twitter. If we go to Twitter, it's interesting because it looks like yesterday the 60 may have crossed up. And with Grubhub, the 60 had been in an uptrend as well. So to me, it seems like the best setup is when the money flow agrees on the 60 and the daily, all right, and the 60-minute trend coincides with the money flow. See, in this particular case, the trend was opposite the money flow. Let's go back to steel. Okay, now we see with steel, the trend had been down on the 62. So I think that's another factor to take a look at and track. I keep trying to come up with something that says, hey, this is a reasonable bet pre-earnings. All right, because the one thing we kind of know is kind of the sectors of the industries, stocks, the groupings, if you will, that tend to have some fairly radical outsized moves. The thing we don't really have is a really reasonable degree of confidence trading directionally before earnings. And, I always say, to me, if we could find that, we'd have the holy grail of trading, because obviously, you can go into a stock like steel, even put 500 bucks in it and turn it into $4,000 overnight. This has been, now the other side of the coin is, if these factors line up and you go in and you take these trades, well, 100% of them aren't going to work, okay? It's just the fact of the matter. It's just unrealistic to think that it is. But when you could have an explosive move, if you're betting the same amount, it's kind of like the Martindale-Hubbard theory here. If you're betting the same amount on each trade, all right, and you have that one that explodes like a steel, that can certainly cover a lot of losses. Okay, for example, I looked at the Tosco trade yesterday. The 65 put was $1.70. Okay, now that was a monthly. They didn't have weeklies. But if we look at that, let's price it out today. I'm just kind of curious. Okay. All right. Now, the 65 put yesterday, and again, this is, by the way, this is pretty thinly traded. All right. It was $1.70. It's now $3.20. You probably could close it for $3.40. All right. Which is about 100% return. So, I mean, the point is, if you put 1,000 into this, you made 1,000 on that deal overnight. O'Reilly, again, not the greatest options in America here on O'Reilly either. But if we look at O'Reilly, the 260 put was 510 yesterday. Right now, they're like $9. Now, again, you'd only be if you limit it to, say, a set amount, for example, $1,000 each trade, that'd be roughly, you'd be buying two. Okay, and on the 260 put, you would have just almost doubled your money. So you have two trades where you made $2,000. If you turned around and did PayPal as an example, well, let's use Twitter as an example, because Twitter did line up. Right, negative. So we look at Twitter, and let's say you bought, well, you'd be totally blown out because it'd be 14. Say you bought the 14 and a half. Let's see if there's a 14 and a half. Okay, they're only a penny. So if you had $1,000 in this, if you think about it, if you did those three trades, each putting $1,000 in each one, you'd be up $1,000 today. You'd have 2 wins, 1 loss, and you'd be ahead of the game. And there was one more, by the way, that did set up. That was Melonix. Okay. Now, if we look at Melonix, negative money flow daily. Negative money flow here yesterday on the 60. $50 put was $1.90. Now, again, that was a monthly put. So that's now 5 to 540. All right, so they were $2 yesterday. So say you bought 5. I'm sorry. Yeah, if you limit it to 1,000, you could have bought maybe 5. So they were roughly $2, call it 55. I'm sorry, the 50 put now is, call it 5. You'd be up $3 on a 5 lot. So you'd be up 1,500. Now, the other degree of practicality here is, let's use those 4 stocks. Is it reasonable to assume you're going to do all 4? That's the problem here. And then the problem becomes, okay, what if you say, well, you know what, Twitter looks the best to me. It's bearish on the 60, so you decide to only do 1, and you lose on that, but the other 3 would have been making you money. See, that's part of the problem here. So the question becomes, how do you discern and pick and choose which ones you really want to do? I mean, that's where this becomes a little, tricky. But if you look at the Melonix trade, this would have been a wonderful trade as well. So there were, basically 3 winners here just following money flow and 1 loser. And I'm going to say actually Grubhub would have been a loser too. So again, to me, is there a way to logically make a prediction to be able to trade earnings? Look at this. Now, here may be the factor. As we can see from Grubhub, the 60-minute chart was in an uptrend. So we had negative money flow on both the daily and the 60, but the 60 had moved into an uptrend. So, because they all didn't confirm, this may have been one you looked at and said, I'm going to stay out of it. But now here's where this becomes incredibly sexy. We know it's had an extreme up gap, up almost 19% off earnings, okay? And, we can generally follow the pattern. And we can know that, okay, this thing's going to probably pull back. Let's see if it comes back to about halfway, through the gap and holds support there, or see what level it holds support, because the odds are it's going to make another run up. We know that because it took out the upper band. Well, now I'm curious. I wonder. All right, so it closed at 35 yesterday. This doesn't seem right at all. Well, 35 would be about $6. All right. The 35 call was about 220 yesterday, and it hit a high of $7 today. Interesting. Even now, you could probably get 660 for it. Yeah, I'm just, honestly, I would love to, so let's take a look at Twitter. Let me get a couple of days off here. Bring this down to 5 days. Okay. So now Twitter is back inside the upper band, probably retesting. We know, and let me take a look here. The low there is 1581. It's overbought, so we know it's probably going to come back down. All right. The question is, where is it going to find support? Because the other way around this would be to wait for it to come back down. I see. Yeah, it just, it's just kind of consolidated there. There's really not much going on. Ideally, you'd want to see this thing pop down, pull back to somewhere down in here, and then get long it. That's what I'd be looking for in Twitter. Yeah, that's exactly, yeah, right at 15.25. Unfortunately, if you did the at the money put here, it's probably not going to come back to ever moving in the money in 2 days. That's the problem. To me, if you're trading pre-earnings, it's an all or nothing move. Either it happens or it doesn't. And you kind of go into these trades knowing that that's the situation. And quite frankly, if you get lucky like a Steel, and you make a 700% return overnight, it works out to be a wonderful scenario that can cover a lot of losses. But the question is, can we come up with something here that gives us a reasonable expectation of a directional bias? And that's one of the things I continue to look at to see if that's possible. Because, as I said before, to me, that's the holy grail. Going into earnings and trading pre-earnings and watching options explode in price. I mean, the thing is, too, we also know post-earnings when the volatility is drained out of these options, we know there's only a certain number of things that can happen. All right, and, you know, typically these moves, you know, will predictably do what we think. And I've seen that over and over again. I mean, mainly on these extreme up gaps, okay? When I'm talking about the fact that the extreme up gap typically holds the low of the bar, the gap bar, and then that move tends to continue in a bullish direction after typically 8 days. So if I go back 8 days from today, I don't think there were any real, let me see here. If I go back to the 18th, all right, LAD. LAD reported on the 19th, okay, with a big bullish up gap. All right, so now we look at LAD, 1, 2, 3, 4, 5, 6, 7. Ugh. You know, it's already started to move back up. I mean, here it got slightly oversold, you know, around 92. So it's up, you know, it's only 3 days after. So it's about $92, and it's up about $5 since that oversold condition. Let me see. LRCX was another one. All right, now look at this Lam Research. All right, this thing gapped up, never really gave you a chance to get in it. It just continued to drift higher. So something like this, you'd have to even scope down to like a 10-minute chart. And let's take a look at the 10. All right, now, let me add a few more days here. All right, so we have a crossover, bullish crossover here. This was on the 20th. All right, we had the 19th, we had a bullish crossover on the 10. Never really, you know, here's right here. It's like your first oversold condition. And here, it got oversold yesterday or 2 days ago here. So, I mean, this level is about 140. So it's up about $7, almost $8 since that time. Let me see. The other one was the GNC that we talked about. All right. So here it is. It's, you know, it's back. Didn't even get oversold today. I was trying to find one. Yeah, we don't really. Well, Con was one. Take a look at Con. That was the week before. It had a big up gap. You don't even see it here. I have it up 245 off of earnings. They reported on the 4th. So here's the 60-minute chart. All right, okay, well, here's the bullish up gap. And look, it just continued to trend up. From the high of that gap bar at 1120, it hit almost 18 today. So it's up $7 since that bullish gap. So this was on the 4th. Let me add 8 more days here. Let's put up 20 days. And see if the 30 allowed you to get into this thing. See, because this is where it gets, you know, questionable. I mean, 1, 2, 3 here. There's day 4. It didn't even really, the Williams never really even got oversold. All right. About 1130, about 10 cents above the high of the gap bar. Look at that. It just continued to trend up. So, I mean, what's kind of unique about some of these deals is that, again, if it gaps up, then we get that close above the high of the gap bar. A lot of times, this is the kind of price action that we see. And I think it's because the shorts are really getting trapped. So in this particular case, that's, certainly what happened. Same with that Lam Research. But you see, what's interesting about these deals is that, there's not a lot of different scenarios, okay? It gaps up, closes above the high, continues to run, or it pulls back, finds support either at the low of the gap bar or about the 50% level of the gap, and then it tends to make another run from there. So it's just, they're fairly predictable. I mean, if I had more time, I could track all this stuff, and, I think we'd be doing very well with these type of trades. All right, anybody have any questions or want to take a look at something while I'm on the phone? I'm sorry, while we're on? But that's what I wanted to cover because I'm really, yeah, but CMG was really very tepid, wasn't it? Let's take a look. It was kind of interesting because they reported, I'm going to show the daily on CMG because this is what had me concerned on CMG. You can see a couple of days back, we had that really bearish bar closing below the upper band. And quite frankly, I'm looking at CMG for potentially here a pretty good pullback based upon the upper band. But if we look at this, before earnings, it was still slightly positive money flow. Let's take a look at this, 60. The 60 had flipped negative. Now, again, strong uptrend. But they come out, report, and boom, they jump right up. And you can see it really didn't gap that much. That's what was kind of interesting about CMG. Didn't really gap much. And the bulk of the move was really, in that first 30-minute bar. And it hit the upper band and basically pulled back from there. But this was really not a significant, earnings move for CMG. It was only a 2.4% move. This is a stock that could move 10%, which would be like a $47 move. Yeah, that pullback, good point. See, to me, that was tradable. Okay, to me, the pullback was tradable. And you can see here, it screamed above the upper band, got back inside it, then stalled right here at the upper band. And that's your short. Right there was about 490 and dropped to 477. That was a nice trade. Boy, if this were a Friday, this would have been a wonderful trade. There's the 10-minute chart. You can see it ran up, came back down, 497 from the high of the day to that pivot low is about a $20 move. Let me put up less time on this chart so we see it a little clearer. Okay, there it is. Now you can see, screamed up above it, closed above the high, stalled right there. And, I would suspect that maybe that first bearish bar above the upper band was when you enter. And you're right, the second entry would have been the reversal against the upper band. It is your retest. And what's interesting about this scenario is it came down basically to 50 on the 10-minute, okay? The 3-minute has stopped right at the 200 EMA and was oversold. So, I mean, you could have theoretically, look at that little double bottom on the 3, you could have theoretically covered your short and then taken a nibble on the long side, because that was about, what, a $11 move back up, and then you're done. Because now you can see it's just chopped, you know, and it's getting narrower. These swings are getting narrower, okay? So what's going to happen is there'll be a breakout or a breakdown here, hopefully tomorrow on CMG. But again, you know, that's a setup that says, okay, you know, the logic dictates well above the upper band on the 10, the price action stalled. All right, let's take a nibble on the short side. But the real proof was the retest here and the sell-off against the upper band. What's interesting now is the 10 has actually crossed into an uptrend. You know, I would ideally like to see this pull back. You know, what's kind of funny about this is when you look at the 30, it never did close above the high of that gap bar or that strong bullish candle. And this price action has all been pretty much confined to that first 30-minute bar. But yet the swings would be fairly profitable just trading within the confines of that bar. All right. All right, well, listen, I think that's pretty much what I wanted to cover today. I like the idea, by the way, if you're going to trade pre-earnings, to generally follow the money flow. Now let's look here, because we've got Google reporting. We've got positive money flow on Google on the daily, obviously an uptrend. Now, slightly negative uptrend sitting at the upper band. This is a stock at this point I would not consider looking at, you know, trading. Obviously, the options are going to be really strong. I'm sorry, really expensive. But, you know, one of the scenarios on Google would be, let's price this out. All right, we're at 890 right now, roughly. So if we look at this, the 890 call is 16 bucks. All right. I'm going to say the 890 put is probably something similar, maybe a little bit more. Okay, 1630. So we've got a $32 projected move. Divide that by 890. So that's only a 3.6% move. That's 1.5. So if I go out 5%, be about $45 on top of 890, would bring me to the 935 strike. So let's take a look here. The 935 call is, call it $3. The 940 call is 215. So that's, let's say you could get, 935, let's say 3, let's say you get an 80-cent credit. On a $10 wide call. That's like an 8% return. You see there's like no volume way out of the money here. So the idea would be you're about a 50% greater than what they're projecting here. You sell the 935 and buy the 940 as protection. The 935 is way up here. Okay, way above the upper band. I mean, so, you know, to me, you if it did open up that high tomorrow, it would be a fairly reasonable expectation that the stock would come back down anyway. But to me, that's kind of the way to look at this structure. But they're projecting a very small move here. All right, so Amazon, we've got slightly positive and slightly negative money flow here. So again, we kind of have a divergence here on Amazon. See, ideally, what I'd want to see is them both in the same direction, like Skyworks reports. Let's see. All right, now Skyworks is negative. Look at this. This is interesting. Let's see what the daily is. All right, daily is slightly negative. Now, this is interesting because it looks to me like today it did the retest of the upper band. Let's see what Skyworks looks like. Let's see here. All right, Skyworks is 104 roughly. Oh boy, and they have dollar increments. The 104 put, the one at the money, is $3. And look, it looks like everybody's on the put side here. This is interesting. Good point. All right, 1973. Not as low. The ADX isn't as low as back here. If you remember, this look at how low the ADX was before the last earnings. And then it gapped up. See, this is interesting because I'm wondering if it's doing the retest today of the upper band and we might see this thing collapse and sell off after earnings. This to me is the most interesting one we've looked at. Now, Western Digital also reports tomorrow. Positive on the daily. Slightly positive. It actually flipped to the negative just now, but 60 in an uptrend. So I wouldn't be bearish. I'd be more biased to the upside here. Interesting. It's Twitter, boy. Jeez. And look at PayPal. Way above the upper band. Getting into climax here, by the way. See, what I'd want to see here on PayPal, scale back to a 30, is a close under the low of that bar. Because you can see we are way above the upper band. Yeah, Twitter is definitely the exception to the rule here. And I think you're right, Andrew. He says it's probably short covering. I agree because it had that huge gap yesterday. It spooked everyone, and now all the shorts are covering. It's like X. Let's see. Okay, now X is starting to reverse here today. Not getting a lot of conviction, but nonetheless, it was way underneath the low of the bottom band. Now look at it. Now it's starting to move up. Now look where it stopped today, 2185. Of course, one of our support levels is always 2188. So that's kind of an interesting setup right there because, you know, had you nibbled, you know, you could have bought right there at 2188 when it hit 2188 with a very tight stop. And quite frankly, you'd be up a buck already. And on a weekly call, that might have been an interesting trade capturing that today. But nonetheless, that's one that obviously, you know, kind of complied in terms of pre-earnings. So, hey, look, I'm going to continue to track this, tracking the money flow, tracking the, you know, the trend really on the 60. I think to me, it seems that the 60-minute trend seems to have more relevancy than the daily. It seems that more often than not, the stock moves in the direction of the trend off the 60. Now, if the 60 does agree with the daily, like it did on Melonix, then it's a better setup all the way around. But anyway, I would love to find something like this because then it would be worth doing some of these trades. And we'll see. I mean, you know, if Google, you know, my suspicion is Google probably doesn't get significantly higher than, I mean, of course it can. PayPal has done it. But, you know, it'll be interesting to see if it doesn't exceed that 945 strike. All right. Well, listen, any other questions or comments? And then if not, then I'm going to close down. My voice is getting burnt out here. All right, great. I don't see anything. So I want to wish everybody a fond farewell, and we'll meet again in 2 weeks. Thank you very much.